What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig. We're going to be going over the charts. We're going to first take a look at the Dow Jones. There is a lot of stuff going on. The Dow Jones is getting a little pump this morning. Will it continue? Obviously, I would expect a rebound from the drop we had, but let's take a look at where we might be headed. Also, we're going to take a look at the Bitcoin halving chart. I want to point some stuff out in there for you guys, so make sure you stick around for that. It's pretty interesting. Will it continue the same 4-year cycle, or has that been broken? We're going to take a look at that. Definitely stick around for the whole video. Smash that thumbs up. Subscribe to the channel if you haven't already, if you want daily updates. Let's get into it. So taking a look at the Dow Jones, right? As you guys know, I think we could be looking at something like the Great Depression here. Of course, unless the government wants to just keep propping the markets up. What are the chances of that happening? I think slim to none, but obviously anything can happen in these markets. Remember, none of this is financial advice, but let's take a look at what I'm looking at. So if you guys watch my videos, you understand I like market structure, right? As you can see, this structure is almost identical to the Great Depression, but we could have one more huge melt up to that 44,000 range, somewhere in that area, making this a rising wedge, right? Pretty steep rising wedge at that. But there is a possibility we topped out there. And if we did, our measured move of this wedge would get us somewhere around the 22,000 range. But as you can see down here in the left-hand corner, if we look at the right-hand corner, if we look at the Great Depression, you can see how far that fell right there. So something to be cautious and be careful about. This could get very ugly. Let's get into the smaller time frame. Our Dow hit our target. We've had this target for a couple weeks now. We hit it perfectly at the 37,887 that we've been talking about, which was just a measured move of this rising channel. We put it down here to the break, and that's exactly where we hit. Now, like I said, today we're getting a bounce. Let's see where that bounce could take us. Fib retracement. If this is let's take a look. So our 0.236 is about 38,350, and then we have our 0.382 at 38,640, and then we have 38,875 for our 0.5 fib, and then of course our golden pocket zone around 39,172 ish, right? So we looked at an Elliott wave count on Bitcoin. I'm going to look at the same count here on, so looking at this as a 1, 2, 3 up here, it should get us down to about that 37,673-ish for our third wave. So that would mean we can get a fourth wave up. It cannot break wave 1, which is at 39,276. And then continuation down to get right here at our 37,673-ish for the final wave. And then we get one more big rally up. Shouldn't break the new all-time high if I'm correct, but we'll see what happens. All right, if you guys are interested in trading, before we get into Bitcoin, definitely check out Prime XBT. They do sponsor the channel. The link is down below. By using my link, you can get up to a $7,000 bonus and 25% off your trading fees. You can trade crypto, Forex, gold, silver, oil, S&P, Dow Jones, all from one exchange. And you can trade Bitcoin against all the different assets. So definitely check them out. All right, I'll leave a video above also explaining how to place orders. So definitely check that out if you are interested in trading, because you can make money whether the markets go up or down. So when people are panicking and the market's crashing, you could be making money. So, all right, let's take a look at, so this was our target right here. We were looking at this rising channel in yellow. Let me get this out of the way for right now. We were looking at this rising channel, which the break of it here told you to watch for a retest, but our target was 65.84. We can get that out of the way now, but we're going to keep this here for a support and resistance line. If we're above that, obviously it's support. Get back below it and it's resistance. But what I had told you guys to watch for was this trend line here, which we broke. I told you if we broke this 65, 684, range, right? We would drop down. Your next target would be this 63.28, which we hit. And then your next target would be just this right here, which was 61.57. These were the areas I told you to watch for bounce. Obviously, we got our bounce. Will it continue? That's yet to be seen. Let's talk about this Elliott wave count. If this is correct, let me get this channel out of the way now. We're done with that. We will keep our support resistance channel right here. But let's put this on there as wave 1, 2. Looking for 3, which would get us down to around 51.72. But your invalidation point for that, right, would be getting back up above. We're going to look at this as a wave 1, 2 here. So our resistance would be right about here. And that is around 67,450, which this would be wave 1, 2, 3, 4. If this breaks the 55 EMA here along with this low, like where is that low? It is around 67.5. So if we break that 67.5 range, that would invalidate this. But so far, this just looks like a third wave, and we are within our wave count here, right? So we have another wave 1, 2, 3. This will be 4 if we do not break this trend line here at 67.5. This will be 4, and then we have 5 to come down. Could it be a overextended fifth wave all the way down here? We will see. But as of right now, I'm still looking at this as a good possibility, right? If we do get down to this 51.7, 51.8 range, look for a bounce back up to the 59. Could be a good trade, right? And then another big fall down to possibly this 42.85 range. Another thing that would get you that target would be going from this high here down to the trend line, bring this over to where we broke, and that gets us right into that range, 41,000 to 42,000. Just be cautious here. Obviously, like I said, the traditional markets will probably get a recovery a little bit today. So this is on the daily chart, and we're going to take a look at the halving next, so stick around for that. But this is the daily chart. We had our, if the traditional markets do get that one big huge rally up, the Dow Jones, meaning the Dow Jones up to that 45,000 range, we could see as high as the 86 range here, and that's just a measured move from here to the break. Now that, to confirm that, we would have to break back above the 73,000, right? We also have this trend line in here. And if we move this down to where we broke, that also gets us at 53,530 range, right? If we do not get back above this trend line, and that is around 67.7, 67.8, looking at this as a triangle, right? But our bearish break targets are, like I said, between 50 and 53,000. Could go as low as at 43, but I'm looking for the third wave down still. So we'll see what happens there. And here is the halving chart, right? The yellow lines going down are the halving. Bitcoin's first halving here, second halving here, third halving, and fourth halving. What is different about this halving? Again, like I said, if it does, like every other halving, we might have another dip after the halving and then a huge rally up to ridiculous numbers, right? And a lot of people believe in the ETF will be the cause of that. We will see. But let's take a look at the first high, right? And then we had our halving and then our second high, right? But we never came back below the first high after the halving, right? Once we broke it, we never even retested that first high, right? That's first halving. Second, we made our high after our first halving. We never came back down below that. Once we broke it, it was broken. We never came back down below it, right? Here's our second halving. Then you made your third high after the halving. Notice, after the halving is when you make your high. After the halving is when you make your high. And then we never went back down below the previous high from the second halving. Do you see what I'm saying here? Never retested it. And then we had our third halving. And after the third halving, we went all the way up, made a new high. Then we made another new high and another new high. 3 highs after the third halving. But what we also did is we broke the old high. So there's a lot of difference here, right? We were only supposed to make one new high, after this third halving, which was here, right? We made another high right here in the last couple months or whatever. But this is the only one we made a new all-time high after making a new all-time high in the halving, right? So be cautious there, guys. If this plays out like I believe is possible, we could be seeing some severely lower lows. I've talked about this for a long time. I've talked about the biggest money grab in history in all markets, unless, of course, somehow they just keep pumping the markets with borrowed money, increasing our debt, which is eventually going to have to end up in a very, very bad scenario. But the opportunity within that scenario are huge, especially if you understand shorting the markets, making money when the markets go down. Usually that is when the most money is made, right? Because that's when the money is actually extracted from the markets. While it's in the markets, it's unrealized profit. But when people are selling the markets, that's when they're taking profits. So anyways, let me know what you guys think. Smash that like button. Leave your comments down below. And I will see you in the next video. Have a great day.